The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 6th, terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We do not make that little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, internationally, 727, what is it? 727-445-1044. Little brain fart there. And, of course, you can always send me an email, steve@tfnn.com. Inside the heading, please put radio show question. That'll stick out. Inside the Tiger's Den, any ping will do using that wonderful instant messaging system. So let's go ahead and get this show started on terrific Tuesday. Bashada Tuesday is what we're going to call it. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading out 22 points, the S&P down 3, so a quiet market. You've got the Index 100 up 3.5 points, no surprise there. The Russell's down 3.5, a lot of threes in essence. Semis are up 7 points. We'll take a look at those indices. Transports are flat. Gold is anything but flat, trading out at $12.96. That's up $13 and change, 1% to the upside. Will we get to 2% today? I don't know. Silver is up 0.7% or 11 pennies. She's trading out at $17.70. Light sweet crude is up 53 cents. Looks like that bottom is in after testing for the last 3 days, the bottom of that weekly TAS market profile. We'll go take a look at that. Bonds are up. In fact, let's go right to the markets. You don't need to look at these things that are moving to the upside and the downside, because we just said bonds are up and gold are up, right? And so for all of you out there that are currency traders, and yes, I am speaking to you. If you're trading gold or silver or the bonds, you are a currency trader. Yeah, just reframe it that way. What do you mean, Steve-O? Well, it's really not complicated. As we go take a look at this chart here, a 10-minute chart here, where you've got gold in the upper panel, you've got the 30-year in the center panel, and you have yen futures in the bottom panel. So instead of showing the currency pair, I'm going to show you yen futures. That way we don't have any delays out here. And we also have things moving in the exact same direction. And what you can see, if you're asking yourself, well, why did gold move? The real question should have been, why did the yen move? And where is it headed to? If you ask yourself, well, why were bonds moving higher? Really, the question was, well, why was the yen moving higher? What we know here is you take a look at this chart, this 10-minute chart. Look, it is not a tick for tat type of a deal where you've got 1 pip is equal to, or 1 tick in the futures contract is equal to so many ticks in the futures contract for gold. But directionally speaking, it is right on. Is it exact all the time? No, but it is so close out there. So if you're trading the metals, you are trading this currency. It is really all about the yen. It will be all about the yen until that stops working. It doesn't look like that is any time soon. So there's the 10-minute chart. You see it right in front of you. Now we take a look, and so that really says what you and I should do right now is spend some time trying to figure out, well, where is this yen headed to? So let's go do that. Let's go take a look at the yen futures contract. Let's stick with it. as soon as I can find it. Where is it? It should be like right in front of me. Oh, there it is. It is right in front of me. So let's take a look at the current yen futures contract, and let's look at the weekly chart. Let's start with the longer term first out here. So there's a key level inside. There's a swing point that it is trading into right now. Takes you back to April 17th, the weekly swing point. We're not going to use volume out here. There's volume that shows up on the bottom. We're not going to use that. But any close inside 9.9196, and right now we are trading at 0.9214, so we're trading inside there. That then suggests that at a minimum we should see a move all the way up to the high, 0.93025. So is the move done in gold, silver, miners, bonds? The answer is no. Now, if there was a rejection of that swing point, again, it's a weekly swing point, meaning at the end of the week you saw it close below that, well, then maybe we've got some sideways-ish type action. And what happens if, in fact, that swing point high gets taken out? 0.93025. Well, then that sets up your A to B equals CD to the upside. So for those of you that are long bonds by a TLT or whatever method it might be, the actual treasuries themselves, for those of you that are long gold or mining equities out here, you are looking for eventually for this yen to go ahead and take out that weekly swing point so that price can move up and complete at least a 1-to-1 A to B equals CD. Now, when it does that, that becomes a Gartley sell pattern, a potential Gartley sell pattern. You don't know until you actually see the pattern unfold, and part of that pattern is seeing a reversal of fortune, seeing some type of bullish or bearish, in this case here, reversal signal that would show up. So at this stage here, in looking at the yen futures contract, all looks pretty good at 112 in the afternoon. A profile, a prices above market profile, so that's bullish. You'll see just green bars, green shoots on each of the charts here. Well, not so much so in the 60-minute chart here. We're just really consolidating between 0.91915 and really the bottom of that box, 0.91578. If we take a look at the daily out here, we already have an A to B equals CD to the upside that is underway. So the first one that you and I looked at was the weekly. So we come down here and we take a look at, well, we'll go ahead and see what that price projection is, right? So this will assist you inside those trades out there, or at least it should assist you. So you can see that we are a ways away from the 1-to-1 A to B equals CD, which is going to take us all the way really right back here to the April 17th high. So this is just simply lining up for you with regard to that weekly swing point, now the daily swing point, and says we're going to go up and tag that area. So look for bonds to continue moving higher. Look for gold to continue moving higher. Look for silver to continue moving higher. Look for all or most of the mining equities to continue moving higher. You and I don't really need to go take a look at anything else if you're trading these vehicles, because it is all about the yen. And at this stage of the game, we don't see anything in sight here that suggests to you or I that this is not going to continue to get stronger out there. So how do you like them apples? And I know you like them because of the way that most of the tigers and tigresses are positioned when it simply comes to the metals. Now, for those of you that would like me to go take a look at Goldilocks, I'll do that. Yes, I will. And if we take a look at it, what does this really tell us? You know, what gold really tells us at this stage here is, let's not go look at that. Let's just go look at the potential breakout party that we have going on here. And when I say breakout, I mean long-term, intermediate term change in trend in Goldilocks. Yeah, look at that descending trend line. Ain't descending anymore. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today.
With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The mining area here. We've got a call, not a caller, but a email that came in. So let me go ahead and work through that, and then we'll go take a look at the general markets, what we can anticipate and expect. So, Steve, I'm long both Nugget, JNUG, and USLV. I plan to hold the next couple of days and move my stop up steadily. Any thoughts? Hey, first, congratulations on being long that. Yesterday, and really prior days, but certainly yesterday, I know one of the things that you and I focused on was taking a look inside the mining sector and GDX specifically, and we were making a big deal. You and I were making a big deal about the price oscillator, bottom panel here, in that it was just hovering underneath zero. And what I suggested was that we really needed to see a nice move here. We wanted to see that get up to zero, which in essence it has done that today, and it is just slightly above it. Because this is when you come from below the zero line out here, we're looking at the blue line, bottom panel of my screen, and you get up to that zero line, you either have a rejection and things start moving lower again, or you pop through, and popping through, says old resistance now becomes new support. So Stevie's red line at 22.79 is your support area. Do I expect we're going to see price come back to that level? No, but I can't really control that. But what you now have is the ideal, that's right, ideal setup inside of the GDX for it to, in fact, move higher. So I would think that you could hold this for longer than just the next couple of days. Of course, you want to monitor what goes on inside your friend and mine, and that is the yen. If we just simply take a look at the GDX on its own, and if we were going to ignore Stevie's red line, and ignore, which we would never do, and ignore the yen, which we would never do, we would take a look and say, hey, you've got 35 million shares right now taking out a swing point that has 67 million shares, and that's from May 17th. So now you might start to get a little bit concerned. Maybe you should be concerned because it doesn't sound like we're going to go ahead and take that out with volume, although I don't know what the end of day, it's possible, but it looks like we're trading similar type of volume at this stage of the game. If you take out 67 million shares, you close above 2367, then you have what we like to call a confirmed A to B equals C to the upside. I think you stay in this trade. It's really not that complicated. The movement inside the yen looks like it wants to continue moving higher. I don't see any reason why the GDX is not going to go target that April 17th area. Isn't that April 7th, or in this case here, April 13th is the swing point, and that's somewhere in the 24.50, 24.88. Remember, just before we went to breakout here, so to the extent that you too believe that gold and the miners generally move in the same direction out here, just before we went to break, what we were showing was the following chart here, which says that we may have, let me just turn off the volume and these profiles that just muddy this thing up. And here we go, here we go, here we go. Just got to pull back just a tad more. There we go. And what you are seeing here, and I don't know how the week is going to end. If today, if this was it, the week ended now, what you and I would say is we now have an intermediate term, long-term change in trend inside of gold, because it's now just busted above a descending trend line out here. So it doesn't look bullish. It doesn't look very bullish. It looks Super Dave bullish out there. And I'm not referring to our polar bear. Yeah, I'm referring, what was that guy? Super Dave what? Osborne, right? Super Dave Osborne? What was the show that he was on out there? In any event, it just simply, this is a significant change in trend if in fact gold can hold these levels. And at this stage, at 1:22 in the afternoon, you and I do not have anything that suggests otherwise out here. So all looks good, and great trade out there, and yeah, nothing wrong with adjusting your stops. Okay, so we've taken care of that sector, and we've taken care of the currency pairs. Now let's go take a look at what's going on inside the markets. What should you expect maybe the rest of the day, maybe tomorrow, and so forth? And I'm going to start here by taking a look at these market breadth indicators that are provided by the TAS market profile system out here, put together by your friend and mine, JL. And what I want to have you just really focus on is really the upper left panel grid and the upper right panel / grid out here. And what we can see is that in the case of the NDX 100, right, the NASDAQ, and you can see that this 60-minute tool has switched into the negative, minus 16 right now, minus 16.22. So what this tells us is that we have, let me see if I can blow this up here, if this will work. There we go. So what this tells us is that we have 34 individual stocks inside the NDX 100 with price above the top of the box, and we have 52 with price below the box. So that gives us that nice little indicator tool that says we may have, let me get rid of the stuff in between here, we may have a change in trend, short term, albeit, change in trend, both inside of the NQs, or NDX 100, as well as inside of the ES Mini. If we take a look at the ES Mini, where did that travel to? Where did that go? Where did that go? Where did that go? There we go. It's now not the bottom. Now it's not the top right. It is the second column. Yeah, change in trend. Short-term change in trend. Okay, short-term. I did say that. Of course. I'm not going to ignore. I may be foolish, but I'm not a fool. I don't know if that makes sense to anybody out there, but there's nothing wrong with being a little foolish every now and then. So if we take a look at the S&P 500, you've got the exact same thing. Now, you don't have it in the 4-hour base. You don't have it in the daily. And so what does this mean? That means to me what we do and how you put this together is we just simply go focus in on the 60-minute time frame charts for both of these instruments. And let's take a look at the NQ, but we're really probably focused on the ES out here because its message is more important as we speak right now. Now, in the case of the NQ, by the way, you know, one of your favorite topping patterns in mine, because it does exist at the top of every bear market that's ever existed, going back to 1886 out here, is where price moves higher, does with less relative energy, then the cavalry shows up. This case here, they did it with a dark cloud cover candle. So we could see that pattern that was in play. But really what we're focused on right now, first, that price oscillator is above zero. So this just says just retracement. So for those of you that might have taken a short in the NQ, you're going to focus in on the price level 58.69.15. You're going to focus in on it like a hawk. And the reason is because that is a bullish structured box out here. Point of control at 58.76, closer to the bottom than it is to the top. Not a super bullish structure, but a bullish structure nonetheless. So for those of you that would be bearish, watch 58.69.15 inside of the NQ. Now, with regard to what else is going on inside the NQ, let me just, to try to finish this off and keep this in perspective, let's go look at Stevie's red line. That's at 58.52. So 58.52 versus 58.69. If you see a move below 58.69, price is going to go tag Stevie's red line, 58.52. Doesn't mean that it's bearish, doesn't mean that's it, it's a top, major top, but just that's where price should go back and test that level of support out there. Does it have to get there? No. What we know is that on a short-term basis, inside the NDX 100, utilizing simple market breadth data, we know that there's no reason for the sellers to not be able to actually hone in and make this happen. And if they can't make this happen, you've got to ask yourself, why is that, Steve-O? Dow's off 42. S&P is off 5. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
welcome back. So we were talking about short-term signals out there and then just trying to identify where price is likely to head to. Inside, I mentioned that the ES Mini is probably more important than the NQ. They're both very important instruments out here to kind of gauge what the market is doing. In the case of the ES, where the price oscillator, this is, again, we're looking at a 60-minute chart. So we're going to keep the 60-minute time frame chart to line up with regard to the market breadth that we looked at. It doesn't make sense to really look at anything else, right? So we're looking for areas of support, resistance, failure, the whole thing out here. And in the case of the ESPN on a 60-minute time frame, we can see that price oscillator in the bottom portion of my screen at about 7 o'clock this morning was when it was crossing the zero level. Now, as it was crossing the zero level, price was moving lower. What that said is we should see a little bit of a slingshot to get back up to test Stevie's red line and to test that area. And in essence, that's what it has been doing for the last 4 hours out here. And we still have the price oscillator below zero. If price finishes the day out below Stevie's red line, right now that's priced at 24.32 is what we'll call it out here, then price should fall all the way down to 24.26, the bottom of its 60-minute profile, slightly bullish structure in there. Closing below that would suggest that we want even lower price. So that's 24.26. In the case of the ES out here, let's go see where its red line is. I think it's a little bit lower than that. The ES would get down to 24.24. So those are the areas to be watching inside of these equity futures contracts for you. Getting below either the level I gave you inside the ES or the NQ out here suggests lower price. And we'll just simply tackle that when and if we actually get there. But those are support levels. I want you to hear that loud and clear. Those are key support levels that these instruments would be going after. Okay, had a question, really a couple of questions out here. Let me take the easy one first. They're all easy, but one is really easy in that John wants to know what are my thoughts on the IWM having an island top. And so, John, my thoughts are that today's action is not an island top. And let me just kind of show you, and everybody looks at gaps a little bit differently. I go right to the T, and that is this. I need to see space in between the gap to the upside, the actual high of the session, which in this case here would be June 1st. I'm assuming this is what you're looking at, John. And that high was 139. Okay, and there was a gap up, slight gap up with regard to the following day because the low was 139.05. So we have a 5-cent gap. The problem is yesterday price came down to 138.95. So I'm not looking at it based on a closing basis. I'm looking at it based on what took place intraday. And this morning we have a bit of a gap down. So that is not how Stevie would classify that as a island top out there. But with regard to the IWM out here, it's very clear if we just take a look at just this instruments, don't go look at the futures contract, that you can see that this is just simply a consolidation. Whoops. That didn't work out real well, did it? But we'll try one more time so we can see the nature of the pattern that is out here inside the IWM. Let's see if that works. There you go. It's basically a consolidation. So I'm going to assume at this stage here that John was looking at this as being an island reversal. Whether it is or it isn't, it's not. That he's looking at this from the short side, perhaps. And if you're looking at it from the short side, then you could anticipate that price should go down towards or to the bottom of this consolidation area inside this 133. But the Russell 2000 is not going to have a complete mind of its own, so to speak. And it's going to need the NQ and the ES to fail. So what I would say, John, is those Stevie's red line numbers that I gave you in both the ES and NQ, you need to see a failure there, a failure to act as support in order for the IWM to play out and get back down to the bottom of the consolidation out there. So I hope I gauged your question correctly and answered your question out there. But and if not, just write back and we'll go ahead and we'll respond appropriately so I cover your answer. The next question that came in, a little bit more difficult, is a question that said, where was it? Something about wheat. SR, is wheat ready to rocket up? And that comes from Mike K. So wheat meaning the actual ETF for the wheat futures contracts here. This is the Tecrium Wheat Fund out here. And, of course, most of you know we're not going to stay inside this ETF looking too long for our answers, but we are here. And if we were to just try to make some type of guesstimate as to what this is communicating to us, which is not a really good thing to do in my book. I really think we have to look at the underlying instruments out here. But what this is communicating to you and I as we speak right now, Mike, is today you've got volume of 82,000. Last time we were up at this level was 143. So it's a bit lighter on volume, and prices run right into resistance at 690, the top of its daily box out here. If it's going to rocket out of this area, you're going to need to see it close above 690. That is just simply taking a look at the ETF, the WEAT out there. And then if it does, then your target becomes the swing point from back here on the trading day of May 2nd. And that's in the 707 to 721. Now, the reason that we're not going to spend a lot of time here trying to answer that question and why it makes this trade or answering that question so difficult is because the WEAT ETF holds 3 instruments in it. Yeah, 3. Not just one wheat contract, not just 2 wheat contracts, but 3 of them. Which 3? That's an excellent question. Well, and it's almost equally weighted. It's got probably 34% of the weighting of WEAT is inside of the September futures contract. So let's go see if we can find the wheat contract out here, ZW. I need to switch over here to September, because that's what it holds. So let's go take – now that is only, as I say, probably about 34%. Don't quote me on the exact percentage, but it's pretty close to 34% out here. So if we change one, they will all change. And you might say, well, what are the other 2 that are in there? That's an excellent question. It's December of 2017. That's like 32%. And then it is December of 2018. Yeah, you got to go out to 2018 in order to be able to really regulate what is going on inside of that ETF out there. So you've got to be able to stitch all those together, look at each of them, and then understand what the weighting is. If you were looking at the September contract out here, though, what we would suggest is that you need to see a close above 452, 452.3. And then that would go ahead and give you a run up into the 465 area. So this isn't suggesting to you or I that it wants to bust out just yet. Getting above the daily top of that box, that would be a nice thing. If we go take a look at December's contract here for wheat, just to kind of so no breakout message here on 34% of the answer. If we go take a look at the December contract out here, let's go see how this is trading. This needs a close above 474.60. So 474.6, or at 471 as we speak right now. You can't have any kind of breakout party until that happens. And then if that were to happen, you're looking at 493 to maybe 508 as the price target there. So as we look at the December 2017 contract, we have no breakout party going on. Let's see if we can pull up the 2018 contract out here, and I cannot. But what I can tell you or share with you is that that represents, and I apologize, my system is just simply not pulling it up. So no breakout that I can see as we speak just yet. Be careful trading those ETFs. They can be a bit tricky when it comes to these commodities. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So if we take a look at Light Sweet Crude here, it's trying to do everything it can to cement a bottom out here. And we suggest that just simply, again, by taking a look at the weekly chart out here, where this bottom's been tested now for, well, from a daily standpoint, it's been tested for the last several days, Friday, Monday, Tuesday, and that price level is 47.23. Yes, it's traded below it, but that really becomes a significant support level, which it continues to hold. That then leaves open 51.39. Won't get to 51.39 until it clears 48.27, but that is what it looks like it wants to do. Now, on the 60-minute chart here, and we have seen this playbook before, at a minimum, though, it's giving you that potential bottoming signal. The reason I say that is because price is now trading above the most recent market profile that it formed yesterday at yesterday at 1 o'clock in the afternoon. There was a brand new profile. So we do have a close above that. That says that this should see Light Sweet Crude get up to 48.20. You're at 47.82 as we speak right now, maybe 48.93. Above 48.93, that starts to change the game plan here and then suggests that, yeah, Light Sweet Crude, in fact, has found a bottom, and 51.39 becomes the level where it heads to. I didn't see any other questions inside of the in my emails. I don't think I missed anything in the den, but if I did, would you be kind enough to repost it? Or if you have something that you want me to go seek and destroy or go take a look at, just go ahead and post that into the system. Now, let's take a look at just some other general things. I'll wait till I get my next prompting of a message out here. Let's take a look at what's going on with the advanced decline data. So we're really close here inside the New York Stock Exchange to being below zero. You're at minus 747. This is going to be an end-of-day calculation. We are below it by a number of issues inside the NASDAQ composite. So NASDAQ composite is suggesting a little bit of weakness we could see further. The volatility index is suggesting to me it wants to get up to 1133. Not today necessarily, but you're trading at 1056. So it looks to me like it wants to get to the 1133. A close above 1133 says 1360 would be in store, and all of that would go ahead and put some pricing pressure into the indices out here. With regard to the little bit longer term picture change in trend, we don't have that message at all inside the New York Stock Exchange. Over the last several days, you and I have spent a bunch of time taking a look at the summation of all of those daily advanced decline oscillator readings. That's the bottom panel. It's still above zero. Now, above zero, there's really no problems inside of River City, that River City being the New York Stock Exchange out there. So that's just a couple of more things. Looks like a question that came in that said, can we go take a look at IP? Let's go look at IP. Let's go see what IP even is out here. International paper. So are you in IP, Top Dog? And if so, what's your time frame on it? Then I can be more specific with regard to giving you the data that you might need. If I just look at it on a daily basis, though, what international paper looks like is, first, it has this little swing point that it's dealing with. Back on April 27th, moved higher, 3 million shares. Let me try and put the weekly profiles on here at the same time. Let's go see if that held price. No, that didn't, but I'm going to go ahead and leave these on here. And price is moving up into that area with lighter volume. 2 days ago was 2.5 million shares versus 3 million shares. Doesn't mean that's bad or anything. Looks like it still wants to move higher. There was a big downdraft. So here, in essence, is your supply line, which it's dealing with, which is February 2nd, where there's an 8 million share day, downdraft day. Did create a island there. So here's your island. I think it did. Let's just go make sure. So this will help. So we're looking at the high of January 24th, 56.01, and the low of February 2nd, 56.01. Man, so what do you do when it's right to the penny out there? Tough call. You say maybe it is, maybe it isn't. So let's look at what we do know, and that this is a stiff line of resistance here, right, where you saw that downdraft. So sellers are camped out in that 55.78 level for sure. But here's the deal inside of international paper: prices above the daily and the weekly market profiles, and until those fail, those being 52.86 or 51.94. If you're in this, I would certainly stay in this. But again, I would have a different answer for you if I knew when you were in it and what you were looking for. As an example, if this was, for example, if this was a monthly time frame chart that we were looking at, let me come over here and on my monthly chart, we would likely have different meaning. I want to turn off these profiles here. Give me a moment to do that. Give me a moment. I'll leave the volume, but we're going to turn off these profiles. And what I'm going to do is I'm going to come over here to my other chart. Here's my other monthly chart for international paper. And as we take a look at this, everything looks good. Yeah, you can see that price relative strength divergent pattern, that TD setup 9 count that it made on a monthly basis as it made its high out there. You can see when it made its low, it was a nice TD 9 count out here. See how this 9 count was trading into bars 5 and 6? Oftentimes the indication that you're going to see a change in trend. Same thing when it made its high out here. That high was made with price trading inside of bar 6 out there. So that's cool. In this case here, same thing. Back here, and I'm looking at a monthly chart, so it's cool how these things work. This is the month of January in 2017. It was trading in bars 5 and 6, and the change in trend in this case here found support inside international paper at Stevie's red line. Right now, that's priced at 51.79. As long as price stays above that, if you were in this on a long-term basis, there is absolutely no reason for you to get out of international paper. We don't even need to look at this other monthly chart out here. We gleaned enough information from the other one. Okay, what else do you want to look at? What do you want to look at? Something maybe that somebody else hasn't covered out here. That would be pretty cool. Gluten-free. I don't know how to go check out gluten-free. On the, you guys believe in that gluten-free stuff? I think the answer is yes. If we take a look at this, sake is gluten-free, is it not? I believe sake is gluten-free. As long as sake is gluten-free, I am gluten-free. You got to love that. Okay, let's go take a look at C-Trip out here. I think C-Trip has been a trip, has it not? A trip to the upside? Let's go take a look at it. Yeah, this thing is at a new all-time high. So if you are in C-Trip out here, hey, congrats to you, Terry D. Now, what this is doing on a monthly basis, by the way, it's taking on the highs from November 2015, 175 million shares. We're so new into the month. I don't know. We're only at 12 million, but not a big deal. Let's go look at on a daily basis what C-Trip looks like, and as long as we're doing that, let me come over here to my other chart, my other daily chart, just to see what's going on here. What's the time frame, Terry, that you're looking for information on C-Trip out here? Let me switch both of this. So on a daily basis, right now today, the swing point that it is dealing with, contained with, is May 10th, which it's taking that out with lighter volume, 2.3 million shares versus 8.3. Is that a big deal out here? No position, maybe an entry. Okay, so then the daily chart is. That's where we will stick to try to give that information. And to do that, we'll just come take a look at two things. Oh, that's not going to help you. That's the weekly profile. Let's look at the daily profiles. So potential entry points into C-Trip, which is ctrip.com. You'd have to say would be the top of the box, 5517, 5306, or 5201 as we speak right now. That's what I would be looking at. On my other chart out here, I'm seeing that is potential. At least 5517 is. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Looks like we have a Stanley Cup, folks. Did you watch that Nashville game last night? Nashville-Pittsburgh game. Great
hockey game.
I don't know when Game 4 is. I imagine it's tomorrow, Wednesday or Thursday out there. I'll have to go check that out. But that was a good, fun game. Great game last night. Nice to see it tied up at 2-2 out here. I had a request from James. James wants to take a look at Kroger. KR is a ticker symbol. He's long at 29.75 out here. So let's look at this, the setup inside of Kroger. A couple different things that I can share with you, James, that this equity, when it made its high, kind of typical formation, moves higher, does with less relative energy. Bears show up and then decides to move lower. Now, the cool thing, and we're looking at a weekly chart, by the way, first, is that it gets down and makes that infamous seventh wave move back in March. March looks like the week of ended March 17, 2017. So we like that, number one. Then we come over to this weekly chart here where you and I can more easily gauge the volume metrics. And, if we take a look at the bottom, again, a weekly swing point from the week of October 3rd, 2016, there were 75 million shares there. When that swing point was tested, it was right here with a nice little bullish engulfing candle on the week of March 13th. That was 61 million shares, was testing 75. That is a light volume test. You had a nice little hammer candle out here the week of May 15th. That's 44 million shares. So the selling has dried up inside of Kroger. Now it looks like what it's underneath as we look at this weekly formation out here, looks like it's just under accumulation. So if you're looking for a good longer term type investment versus trade out here, looks like Kroger might be your deal. This has just simply been moving sideways since March 13th. So the accumulation here could be going on for a while, but it looks like the selling has dried up. If price on a weekly basis is going to get above 30.87, then you may be seeing a change in trend. Now, the other cool thing is on a daily basis, you don't often see this. I don't think this is what Basil calls his hat trick out here, but this would certainly qualify on the daily and the weekly, since we are talking about hockey, is on the daily chart. You get to wave number 7 or G out here. So now you got the weekly that's giving you that message, the daily that is giving you that message out here. And again, I think just more sideways consolidation. If we switch over to the daily time frames here on this chart, let's go see what its message is. And its message, brand new profile that formed today. Closing above 30.29 would be nice, but you'd need to see it with more than 14 million shares. You only had 3 million shares today. So looks to me like just some accumulation going on inside of this equity. And, hey, at this stage here, congrats on the trade. Of course, it's only a nickel above where you're trading at. I don't see any reason to exit this position at this stage. It's had all that nice testing out there, and it looks like to me like you worked hard to be able to identify it and work hard at it. So with about a minute to go, folks, here's what you and I know. We know that the market breadth on the short term, only the short term, 60-minute chart for the NASDAQ 100, for the S&P, starting to show a few chinks in the armor out there. We know the levels that we're really, in essence, going to pay attention to. Stevie's red line levels out there, 58.52 inside of the NQ. That should be support. If it gets broken, then we're going to look, we'll talk about tomorrow where things could head to, but support, strong support. And inside the ES Mini, it's 24.24. And all that's going on out here, there's not a whole lot of anything in the big picture out there. And maybe tomorrow we'll talk a little bit more about the big picture. We began doing that last night on Tom's show. And just so you know, the call on the NDX 100 is around 84, 85, 8600. Right now, folks, it's trading out at 5,800. Have a great day. Stay tuned for David White. We'll see you on Wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.